It's the Bloomberg Rainbow Forum. I'm Manus Cranny in Zurich with the man from UBS. It's Paul Donovan, Chief Economist for Global Wealth Management. Paul, do you know what? I'm waking up every morning to the Donovan podcast. I encourage everybody to go and listen to this. It's this mellifluous voice. I've decided what your next career is. It's on the Today program. I have this vision. You're on the Today program and your voice of reason. You join us today to discuss the transformation of the consumer base. This is a diversity forum, Paul. It's great to have you with us. Hopefully you've been listening in. I want to lean into your economist hat, Paul. Data. What's the single most compelling piece of evidence that you've seen that diversity can boost the bottom line?
Well, I think there's two issues here. The first is, and I think we've been discussing this, the data isn't great on all aspects of diversity, in particular sexuality. We don't have the data that we need. But where we do have data on more visible forms of prejudice, like gender, for example, or very often race, it is very, very clear that if you've got a diverse and inclusive workforce, you have the right person in the right job at the right time, you're going to do better. And you can see this in terms of companies which have better gender diversity all the way up, not just women running the HR department, which used to be the sort of stereotype, but genuine diversity within the organization, which means that the culture has embraced diversity. Those companies consistently outperform in terms of earnings and long-term growth projections. So we can see this in the data where we have the data. Unfortunately, with sexuality, we're still lagging behind in terms of the quality of data.
And that's what we've debated in the past two panels, which is there's legality, there is hesitancy, there's jurisdiction, and there is privacy. When you make statements like that, I can prove that if you have a more diverse workforce, you probably have a more profitable business. Are global CEOs listening more to that message? And do you think it's transferring to real action, Paul?
So I think global CEOs generally get this, that it's blindingly obvious that an inclusive workforce means you're hiring the very best possible people, and diversity means you're considering the problems, the challenges, the big structural upheavals we're facing from all sorts of different angles. So it's a blindingly obvious argument. The problem, of course, is I think less with the corner office, and it's more as we go down the management structure, the sort of the middle management. And the issue here is not even necessarily sort of malicious prejudice coming through. Very often people are busy. It's an increasingly complicated world. There's more and more complexity. And so we all of us tend to fall back onto rules of thumb. But of course, the rule of thumb very often creates casual prejudice coming through, unconscious bias. And overcoming that is really quite difficult to do. People think, oh, I like that person, so I want them to come and work for me. Well, that's not necessarily the approach. You want the right person to come and work for you. And if they argue with you, that's probably actually a healthy development and makes for better quality decision making. But we tend to default back to our rules of thumb and our comfort zones. And that's really the challenge that you've got to try and break. And it requires, not just a rousing speech from the podium from the chief exec. It requires a genuine culture of diversity and inclusion, and that takes a lot of effort to get right.
I also think that probably takes quite a bit of time. That just doesn't happen overnight, as you say, in middle management. You need to take middle management aside and say, you need to rethink or think again about how you approach hiring. Paul, let me ask you one of the questions that's coming in, because it is an interactive session. I have a bunch of questions, but let's go with what the audience want to ask you. I think this is tough. How do you know when a company has reached diversity? Because we've just debated, it's difficult to pull in the data. Is it boxes checked on a form? Or is there something else? And maybe this goes to culture. I'm not sure. But how would you, as a chief economist, sort of say, yes, that company's jolly diversified?
It's really difficult because Yeah, I think there's a real risk with the box ticking exercise, because you can have superficial diversity without having genuine diversity of experience or of thought. I mean, this is one of the problems I think we've seen in Norway, where there's a requirement for no more than 60% of board members of a listed company to be of one gender. But what you've ended up with is inevitably 40% of the boards are women, who all have identical backgrounds, identical educational experience to the men. And so you're not really getting the sort of genuine diversity of thought other than this one sort of narrow area. So it really is, I think, about the culture, and you've got to look for the flags. In many ways, I think it's easier to see when a company hasn't got it right, because the red flags tend to be more visible. But if you have got a company that is really engaging with its employees, that has racial and gender diversity, which tend to be more visible, and then on some of the less visible forms of prejudice, you have religious inclusion, you have a strong sexuality support network, that kind of thing, where the benefits programs for employees are very clear, where the company stands by its principles, even if that's going to cost it business in the short term. Those are the sort of positive signals. But unfortunately, you can't pull this together into a nice Bloomberg index. That's the real problem. I can't go to my terminal and pull up diversity of a company and start correlating it with things, because it's a lot more subtle and nuanced than that. But that doesn't make it any less important.
Well, maybe that's something that we should pursue. I mean, we've got ESG benchmarks, and I know that there's a whole host of discussion about what's the right one to use, but okay, diversity go. Do we need a diversity go button on the Bloomberg? Would that help CEOs and boards go, okay, we need to actually, we're going to be metric now in terms of who sits in this boardroom. Let's keep it at board level. Would a diversity go index on board level be of value to the world, to consumers, to asset managers?
I think you to be a traditional economist about this, yes and no. So I think yes, in some cases, it forces companies and chief execs to challenge themselves and to challenge their thinking. And why don't we have more women on the board, and why are we doing so badly on diversity go on Bloomberg? But then the risk is that encourages the box ticking exercise rather than the more genuine inclusivity and diversity that you need. And I think very often when we're talking about forming a culture, it really is about the intangible things that come through. So our former chief exec, for example, attended a Pride march in Lugano, just as an attendee. No big deal, no massive press statements, but I think it's important. I'm going to give up my Saturday to attend this thing. The impact of that on the culture of UBS, I think, was huge. Or the fact that we support and have campaigned for marriage equality on 4 continents. Again, huge impact. But how do you put that into a summary document? How do you come up with something which accurately captures that? And what is the weighting of supporting marriage equality versus having an advanced pride network versus racial equality? I mean, it becomes very, very different to quantify these in absolute terms.
Would you say then, and I've met your former CEO on many occasions, but when I met your current CEO this morning, for a solid conversation. How important is that for Rolf and formerly Sergio to appear? Do you think that empowers the juniors in the company to be more confident, maybe, Paul, to come out somewhere in the LGBTQ plus spectrum?
Yeah. I think it does. I mean, I think certainly when I started in the financial markets, A, you didn't come out if you wanted a career, and B, because of that, there were no role models. There was nobody saying, yes, actually, it's fine, and you can succeed. And so people just basically stayed in the closet, and very, very few people dared to come out because the consequences were thought to be negative, and there was no counterfactual to say otherwise. I personally believe that when it comes to leadership, yes, I mean, obviously, you need to lead from the front, and you need to have people making it very clear that the organization is diverse and inclusive, and that is the rousing speech from the podium and the social media commentary and the public policies. But I think there's actually a more subtle way of sending support, and it is things like Sergio and the Pride campaign. It's senior leaders not attending events to speak from the podium, but attending events to listen. Yeah. Attending events to be part of the audience. And I mean, imagine you're a graduate trainee, you're unsure about whether you can come out, and you go to a Pride event at your organization, and the chief exec is in the chair next to you and has a conversation with you over coffee. Imagine the impact that sort of thing has. And I think that's the difference between sort of checking the boxes and really building the culture within an organization.
But then that's got to go down through the rest of management as well. It's not just show and tell, but it's about delivery. Paul, so a lot of the data, and again, I suppose if we ever build Diversity Go, maybe we'll lean into you for what should be the component parts of Diversity Go. But I want to deal with some data. We have a whole new generation who are coming behind me, who are involved in asset management. They're involved in deploying their resources and their income and where they choose to place their money. This is critically important, and this is why our audience perhaps would do well to listen to you and try and turn this over in their head. For asset managers, for banks, for institutions, you've got to adjust. You've got to be more cognizant of LGBTQ+, because we are your customers.
Yeah. Well, it's on all available metrics, it's at least 10% of the global population identify as being somewhere on the queer spectrum. This is a sizable group of the population. I mean, it's a large minority, and so of course, that you can't say, well, we're going to ignore 10% of our potential customer base. I mean, that's no way to run a business model. And so I think that absolutely, this is something that companies need to take close attention to, and I think what we need to realize is, again, in a world where social media connectivity creates communities, particularly for sexuality minorities, where, to paraphrase the British comedy series, that there is sometimes a sense that you're the only gay in the village. Well, of course you're not, but you can feel isolated. But the online social community, the podcasts, the chat rooms, the networks have brought the LGBTQ+ community together in a really dramatic way. And I think it has helped with the higher profile, the fact that people feel more comfortable about coming out. But that also means for companies that there's a huge reputation risk. If they're blasé about this, if they're ignoring the need for equality from the LGBTQ+ community, then their brand can be damaged very, very rapidly. And we've seen this, fast food restaurants in the States, which support anti-LGBT causes and have been pressured by relentless damage to their brand to change that position. And that, I think, is something that companies need to be a lot more cognizant of in the modern world. That there is a growing sense of a virtual community which really has power and can influence economic events.
And then that trickles down, doesn't it, from not just the brand, the masthead brand, that trickles then down into the supply chain. And that's something that we are seeing more and more. I mean, I know that we see it in the E and the G, but it can and will become more prevalent in the S, within the E, S, and G, into the supply chain. In other words, who you do business with. If you are a major banking institution, who are you doing business with, or an asset manager? What are you buying and where are you deploying assets?
Absolutely. And I think this is going to be a growing issue, because I think the value of brand, in my view, constantly grows, particularly as we move to a more virtual world. The value of brand actually becomes a lot more important in that situation. So companies need to protect the value of their brands a lot more. The long, complex supply chains throw up potential risks around that. And we've seen that very clearly with the environmental story over the last 10 to 15 years. Now, in my view, the interesting thing, as I look at what is happening around diversity and inclusion, the S part of ESG, I would say that S today is where E was 10 to 15 years ago. And so I think we probably follow the same path, perhaps at an accelerated rate. And so, yes, investors and customers and, of course, employees are going to be asking more and more questions about what a company's approach is to its supply chain, how rigorously is it enforcing its values on the supply chain, and making sure that you're not indirectly supporting prejudice and hostility to the queer community.
In terms of data, again, I go back to this, maybe it's sort of 12 years at Bloomberg. I don't know how many years you've got at UBS. I've got 12 years of a chip. Gallup, 18 million American adults now identify somewhere within the grouping of LGBTQ+. And for Generation Z, 1 in 6 now identify as LGBTQ+. How is this a positive trend? How is this going to work for good? What do you think the outcome, because I know that you have inputs and outcomes as an economist, what do you think the biggest outcome of this growing ident will be, Paul?
So I think there's two issues. The first thing is we know sexuality is genetic. So unless you're suggesting that Gen Z is somehow genetically different from the rest of us, which I don't believe for a moment, Gen Z is basically without the cultural hang-ups that certainly my generation had around sexuality. Yeah. And so they are just more able to be honest about who they are. Now, the reason that's important is that gives us a clearer sense of the size of the LGBTQ+ population. And you sometimes get pushed back, the LGBTQ+ population is 3% or 4%. Well, that's the group that actually self-identify, including people of my generation who were in the closet for years and are still now reluctant to be very public about it, etc. So that's not a real number. That's your baseline on which you have to build. The Gen Z data tells us how far up we can go, and therefore how sizable and how significant this minority is. So I think that of itself is important. But what it's also telling us is that the attitudes of the younger generation are very, very different from the attitudes of the older generation, which this is proof of it. And that means that a company that is not offering equality, not being inclusive in its policies, risks alienating not only potential members of staff who are queer, but potential members of staff who are just members of Gen Z and are saying, actually, you don't share my values. My generation don't have these hang-ups. We don't think of sexuality as being something that should be a target for prejudice. And of course, it shouldn't be. If you don't share my values, I'm not going to come and work for you. So you're not just cutting off potential queer employees, you're cutting off the whole younger generation. This is no way to run a business.
But there, I think what you've identified is the generation gap, essentially between typically in older organizations, perhaps not so much in new tech and with internet. Perhaps that gap is narrower, if that is the correct way to look at it. Paul, we just got under 1.5 minutes left. What do you think the most important thing is? We've obviously got maybe the odd CEO, asset manager, dare I say it, maybe even a hedge fund manager. What's the most important message that you would send to them for their business on LGBTQ+ diversity and inclusion?
So I think the single most important thing, if you're running a business, is to challenge your unconscious bias. A former colleague has a great phrase which said, I always want to make people feel a little bit uncomfortable. And I think that's right, because if you're feeling a little bit uncomfortable, you're suddenly becoming aware of your bias. It's not massively uncomfortable, barriers up, I don't want to hear it. You're thinking, actually, why do I feel uncomfortable? What is it about me that is causing me to feel this? And that challenges the unconscious bias, which I think is one of the really corrosive things that comes through. As an investor, I think you've got to ask yourself, is the culture of this company something which is going to make good quality decisions and employ the right people? And that means basically, is it diverse and inclusive? And it's not a box checking exercise. It's getting the whole culture of the company right. So it means nowadays, until we get diversity go on Bloomberg, it does mean that you've got to do more legwork. It does mean you've got to look at the company's policies and the public stance. Are they actually doing what they say? But if they get that right, then it's a company that, in my view, has got a future and is worth investing in.